We're going to have to listen to our next guest, because what are the best bets at each of these groups? We had 3 portfolio managers lined up. Let's kick it off with the very best of the best small cap plays. Gary Bradshaw from Hodges Capital Management, give us your top pick.
Mandy, at the Hodges Small Cap Fund, we like a Dallas-based restaurant company, Brinker International. And Brinker is, they own 1,500 Chili's scattered around the country, and they're growing earnings 17 or 18% a year, and we think that will continue over the next 3 or 4 years. One thing we like about Brinker is that over the last 8 years, they bought in 50% of their shares outstanding, meaning in 2005, they had 130 million shares at that time. Today, there's only 65 million shares outstanding. So as they grow earnings per share are increasing because they're over fewer shares outstanding. The other thing that Brinker's done, they've remodeled their stores. They just raised their dividend 20%. And we think the stock is $45 today. With their earnings growth and outlook, we think it could be a $60 stock in 2 years.
Ooh. All right, Gary loves to buy, eat. Thank you very much. Let's go a little bigger now. The mid-cap stocks with market caps generally between about $1 and $2 and $12 billion. Brian Lazorshak of the 5-star rated Chase Mid-Cap Growth Fund is here. Your 3 picks, 2 of them well known to our viewers. Jarden, Martin Franklin, CEO, constantly on CNBC, great guy. You also have Polaris, Scott Wine. They're very cool snowmobiles and motorcycles. Aris or Aris Corp, a different name, unknown. Who are they and why do you like them?
Sure. Thanks, Brian. Aris is one of the smaller stocks that we own in the Chase Mid-Cap Growth Fund. Very interesting company, makes set-top boxes, actually bought Motorola's old set-top box business from Google. This is a very exciting business. Comcast, just the other day, was talking about how much traction they're getting from a new rollout, new features in set-top boxes, and Aris is providing those. So when you have a $100 billion company talking about how much they like the product that a $3 billion company makes, that can be a very good thing for the stock. And yet it's still extremely reasonably valued, about 12 times 2014 earnings for tremendous growth.
Okay, so that's Aris Group. But just to reiterate, your top pick in the mid-cap plays is Jarden Corp. Okay, let's round it out with the big guys. Where should you put your money to work in the large caps in 2014? Brandywine's Patrick Kaiser. You have JP Morgan. There is no amount of legal settlements, multi-billion-dollar legal settlements that can be thrown at this company. You still like it?
Yeah, sometimes the best opportunities are in things that everybody has skeptical about or that there's often dislike. But I'll tell you, the opportunity for JP Morgan, as well as a lot of the large cap space in general, is that they're a lot cheaper than a lot of the small and mid cap stocks out there. Right now, our portfolio is trading for less than 13 times earnings across an entire portfolio. Tremendous values out there. With JP Morgan specifically, stock today is in the upper 50s. We think that in a couple of years, they could be earning $7 to $8. That means we think the stock could be $80, $90. You might get a 50% return over the next couple of years in JP Morgan. Growing dividend yield, buying back stock, benefits from an economic recovery, benefits from higher rates. I think most people think that rates are going to rise over the next couple of years. So there's a lot of ways for JP Morgan to do better as a company, a lot of ways for the stock to do well. And we really think that, first, the bad news is mostly behind them. And second, there are a lot of people that still are afraid, and a lot of times when other people are afraid, that's the best opportunity as an investor to make good money in a stock.
Yep. Okay, and you've also got MetLife and GM. Thank you, guys. Thank you, Patrick. Still ahead.
Thank you.
Drugs, and more drugs. But first,